Hey guys, welcome back to the Crypto Corner, your crypto connection. Today's date is April 9th, 2019, and today we're going to be looking at Bitcoin and the state of overall crypto for today's date. So before I begin though, I gotta pop in here with my daily disclaimer. None of this is financial advice, so please take everything I say with a grain of salt, and please formulate your own conclusions from what is broadcast here amongst other YouTubers and other vlogs or posts that you read about. None of this is financial advice. I am not a financial advisor, so please, this is for entertainment purposes only. All right, now that that's out of the way, so let's look at Bitcoin today. And we had a video yesterday, and we talked about how I felt that we were starting to form a ascending wedge here. Okay, this started back on April 2nd when we had this massive $1,000 candle, which is very bizarre. I can't say bizarre, it happens. But this was kind of an anomaly, right? So when we pumped up $1,000, we started making higher high, along with higher low. With this, you can see by this trend line here that we are starting to form this wedge pattern. Some people are saying that they are believing this is a bull flag. And I guess if you kind of start, going wick to wick, maybe you could count that as a flag or an ascending wedge. I'm not typically on an ascending wedge. An ascending wedge pattern a ascending triangle pattern, as you see here, is sometimes more likely than not a bullish structure, right? So typically on an ascending triangle, you'll bounce through here, and what this is, these are the bulls and the bears fighting it out. And once it gets to this apex right here, right in this area right here where it's getting so tight, it usually results in a break to the upside. I don't know if they could be right, they could be, but I'm more of the impression, I'm kind of starting to think this is an ascending wedge, which typically 9 times out of 10 is a bearish structure, to where in an uptrend you'll have a rise up, and then you'll bounce around in this region right here, and then once you get to the tightening portion of this wedge, typically you'll see a break to the downside. Let me see if I can draw this out. That might help just a little bit. So you'll bounce through here just like we are doing right now, and you can see how the range is tightening up and tightening up and tightening up. And typically what you'll see in a structure like this, you'll see once it gets close to the tightening portion of this wedge, you'll see the break to the downside. Okay. Conversely, if we go with some other theories that are out there, that this is a ascending triangle, the same pattern happens, but you'll see a break to the upside. What we're actually in? Well, we'll find out soon, because regardless, it's coming to a head either way, right? It's going to be hard to say which one is right until it actually happens. So the best way to trade this type of a pattern is for a break either way. So either you could set some buys here once we break this range. We've already topped out twice here, right? We topped out here on the 7th of April as well as the 3rd of April. So that would be a good entry point. Or if it's going to break to the downside, then a break of this line right here would be a good place to exit your position or place shorts. Okay. Now, we talked about this on yesterday's video. Right now we are currently looking at the 4-hour chart. So what I'm looking for, if we break to the downside, which I'm of the opinion that we're going to get a correction, we're going to be breaking to the downside. So what I would like to see is a retest of this uptrend line that we started forming back last month, actually back in January. So you can see how we've been on this uptrend line here for the past 3 or 4 months. Okay, we've retested this line 3 or 4, 5 different times, okay? So what I would love to see is another retest of this line to where we come down and we are going to retest this as support, which would put us in the neighborhood of the if it were to break down right now, it would put us in the neighborhood of the $4,100 to $4,200 range. Not saying it will go down right now. It may take some time to come back down. So by the time that we come back down, we may be in this area right here, which would be in the $4,300, $4,400 range. Now, yesterday, we talked about these different zones that I believe that we're going to start following for the better part of this year, guys. I think right now what we're going to be doing, I believe right now we are not in a bull market, we are not in a bear market. I think we are in a transition zone when we are transitioning from a bear market into a bull. In this transition zone will be a lot of accumulation, okay? So we are going to be traveling in these zones for the better part of the year. So what we discussed yesterday is this zone 1. This is kind of like our bottom zone. This is kind of like, I'm going to call it somewhat like a safe zone for Bitcoin. This is an area that we know that we have a lot of support and resistance in this area. If you could call it a safe zone. I mean, I don't know if there's any safe space in a market that's so volatile. I mean, it's not as volatile as it was, last year, but once we kind of get some more money coming into the market, the volatility is going to come back. So I use the word safe zone, loosely, okay? But what I mean by that is we have a lot of support and resistance in here. We can definitely pick out some good levels in here. Once we get up into zone 2, there's really not a lot of support and resistance in this area. We are currently at some areas right now. If we go back, you can see we have a little bit of support here, but there's not as much as we have down in this lower region. Hopefully that makes sense. And then we get into zone 3. This is a very dangerous area for Bitcoin. Unlike zone 2, there is a lot of resistance here, okay? You can see how many touches we had of the 6K region. I drew this red line for my own purposes. It's like a $5,800 range, but honestly, anything around the $5,600 range all the way up to like the $6,200, $6,100 range, there are going to be this. I consider that I drew it red for a reason, because it's like a brick wall. I mean, this is like a red brick wall, that there are going to be a ton of sellers and a ton of shorts in this area. A lot of people will be looking to exit positions in this area. So this is a very, very dangerous area. We will have to have a lot of momentum to be able to break through this. It'll take. I would be surprised if we could bust through this region on the first attempt. Let's say, for instance, that I was wrong on this ascending wedge here, and it was actually a ascending triangle, and we busted through. I would be highly surprised. I think it would shock everybody if we were to break through this on our first attempt. I think it's going to take multiple attempts to break through this. I mean, you can see back here how many attempts it took to break the 6K region back here, and you know as well as I do how many more buyers and sellers were in this market back then versus now. So we have a little bit less now. You can tell that by the total market cap, but it took a long time to break this region when we had more investors, right? So it's going to take just as much, if not more, to be able to break through and consolidate upon this. So keep that in mind. It's going to take multiple attempts. So even if we did break through this region, if we were to come up and test this box or test this line here, I could easily see us getting rejected, and we would have to come back to get more momentum to be able to for another retest. And perhaps we ride this uptrend line here, and maybe this whole thing here is just a big ascending triangle, to where once we finally do get enough steam behind us, so to speak, maybe we could break to the upside. Very possible. But I don't see us getting through on our first attempt. That would be borderline ludicrous on in my mind. So looking back at the daily time frame, let's skip over to 4 hour. So we talked about this again. The reason why I'm thinking that we are going to be having a correction incoming is because we saw that there is some divergence going on. Let me try to clean this chart up just a little bit, just because I don't like looking at super sloppy charts here. So we are starting to see some divergence coming in. Okay, so we have price that it's going higher, right? Let me zoom this in just a little bit so we can get a good idea of what we're looking at here. So we're seeing price go higher, starting all the way back from this $1,000 candle. So we're getting price action that's going up, right? So our price action is going up. And then, but we're also seeing a bearish divergence on our MACD. We are also seeing divergence on our RSI. Now this is noticeable on all time frames below a day. Okay, our daily's not showing it yet, but once you skip over to the 4 hour, you can start seeing it. And even in lower time frames, it's even more prevalent. Okay, so this is typically a sign of a reversal, or this is a sign of distribution. And so that's one thing to be very careful about, is that I believe that's going to be coming. Something big is about to come. No matter how you take the structure we're in now, something is about to pop. We are very close to the end of this structure that we're in, whether it be a ascending triangle or, in my theory, a ascending wedge. So I would be very careful about doing anything until we get a confirmation here or here. So then once you, if we break above, we probably have some targets. We could target the $5,500 range all the way up to like the $5,800, $5,900 range. Or if we break below, then we have a couple of different targets that we could potentially hit. Target 1, I would see us coming down to around this level here, the $4,700 range, because there's a little bit of support and resistance. Actually, let's raise this up just a little bit right there. So we have this would be a good first target, is the $4,700 range, because we can see we had some congestion in here. We came down, we retested this here. So this might not be a bad entry if we wanted to go long here. Me personally, I could see us going down to this area right in this $4,400 to $4,500 range, because this area is strong support for us that we saw back. Let's go back to the bigger time frames. You can see what I'm talking about. So the bigger time frames show that this area here, we had some congestion in here. We had a couple of different touches here. So this is stronger support here. If this did not hold, then I could see this blue line that's right here around the $4,100 rate. This would be very strong support, maybe even just a little bit higher, maybe around the $4,200 range would be a really good support right now. So you can see if we were to break down right now, that blue line that intersects with this white uptrend line, that's about the $4,200 range. I think that'd be a very good support line. This is medium term, guys. This is not long term. This is not short term, because I'm of the impression, I think that we will retest these lower regions. We need to have a double bottom in here somewhere, whether it be this is the bottom or this is the bottom. We need to retest a bottom. We need to retest a floor, right? So if people are considering this the capitulation candle that we had, much like the 2014-2015 bear market, and then we kind of formed what's called like a new bottom, and let me show you that just in case you didn't catch yesterday's video. In 2014-2015, we had a very similar looking chart to play out, and maybe it'd be easier if I show you the weekly. And what is going on here? I just lost all of my data. I'm going to have to edit this out. No, maybe not. Okay, here we go. I apologize about that. Okay, so 2014, 2015 bear market, we had, actually let me go over to the Bitstamp chart. It's a little bit easier to read on the Bitstamp. Okay, here we go. So you can see right here that we had a capitulation. Let me zoom in just a little bit here. So we had a capitulation down back from, where are we at here? Here we go. Right here. So we had a capitulation down around August of 15. We came down and we capitulated down, right? This was obviously the very bottom of this market back in 2015, which was $198. Isn't that crazy? Think about if you could go back in time and buy up a bunch of Bitcoin at $200 a piece. Anyway, so we had a bottom here. We came up, we rose up, we had a rally, and then we came down and we touched again. Okay. Now these are weekly candles, guys. So each candle is 1 week. So, but you can see even on the weekly time frame that we came down and we tested right here. This was our first, I guess you could call it a new bottom. We came up, we rallied up, we came down and touched again, we touched again, we touched again, and then we started our rally. Now, about this time here is when we had our golden cross. We talked about that in the last video. If you guys have not watched yesterday's video, you need to watch that. The golden cross is something that a lot of people, including myself, will be watching extremely close. The golden cross is probably the best time to get into like a coin or any kind of type of an asset. Whenever you have a golden cross, then that's when you know that the market is definitely shifting from the bear market to a bull market. And conversely, which we saw back around this region, I was actually right around here, that's when we had a death cross. And if you guys aren't familiar with what the death cross and bear cross is, we'll throw on the markets right here. We'll throw on put it in a day format. So what the death cross is, if for those of you that are not aware what it is, most of you probably do know what it is. So the death cross is when your 50 moving average, this green line right here, crosses on your 200 moving average. Okay, so you can see how this green line dips below this red line. So this was when we had our death cross. Okay, there was a lot of information that came out about this death cross, and that's a very bearish signal when you see that. Now, if you go back and you look at the opposite of that, when you have a golden cross, you can see right here, we actually had two when we were ending our bear market in 2014, 2015. So we had a cross right here. Try to ignore this blue line for what I'm talking about right now. So you had the green line that crossed above the red line. This was kind of a first golden cross, signaling, okay, we are getting very close. You know, we had this rally, then we had a dump back down, which kind of brought us back down, and we did cross back through. But you can see we immediately, within about a month, we had another golden cross, and this was our true golden cross. So, and you can see that the two golden crosses were pretty much identically as far as like where they crossed at, okay? But when you see a golden cross, guys, this is a great time to put in some longs or to buy, okay? Because you know it's about to go, okay? And that's a good time just to hold on to it. And you can see once we crossed above this area here, let's make this easier. Let's turn off this 100. It cleans it up a little bit. It's easier to read. So you can see when we crossed here, we crossed up. We did not cross back below. This green did not cross back below the red until we had our death cross, which was right here. Okay, so if you wanted to be, I guess, extremely safe, you could just trade the crosses. Okay, so you could as soon as you see a golden cross, which let's say you saw here, which you would have been buying it at $248, and you tell yourself, okay, I'm not going to sell until I see a death cross, then you would have been selling at $9,400. Okay, you would have missed out on about $10,000 worth of price action, but hey, I mean, you turn $248 into $9,400, so that's not a bad return. And I think that only took let's measure that out from our golden cross here to our death cross was 880 days. Okay, so yeah, so it took a couple 3 years, but you turned $248 into 94. That's not a bad return, guys. So, and that's like, actually look at this. So if you were to, let's say on this golden cross right here, let's say you would have bought the top of this candle right here. So if you would have bought the top and then you would have sold at this death cross right here, you can see the profit. You made 1,900% in that 3 years. You try to get that with any 401k or stock purchase or whatever, even in 3 years. I mean, that is ridiculous returns. So that's one way you could very safely, very easily trade this market if you decided you want to do have the quote unquote lazy river approach. So keep your eye on that. Now, one thing that I do want to pull up and show is the Bitcoin shorts. Another big red flag that I'm starting to see right now is the Bitcoin short market. Okay, right now we are entering all-time lows on the Bitcoin shorts. Okay, so you can see this red box that I drew right here. This is an area to where when we touched or were in this red box, we had a massive sell-off. Okay, so this is a very dangerous area. So let's say August 3rd of 18, you could see it was in this area. August 3rd of 18, what happened August 3rd of 18? Let's go back and let's take a look. August 3rd of 2018, we were right here. Okay, so this is when we had this huge sell-off. Okay, it's kind of backwards to think about this. It doesn't make a lot of sense to a lot of people, and I know when I started looking at this, it didn't make sense to me. You have to think opposite of everybody else if you want to make money in this market. So if shorts are low, which means not too many people are shorting this, then it means optimism is high. Well, since 99% of people lose money in this market, you have to think opposite of what they are thinking. So people right now are very overconfident in this market. They're very confident that Bitcoin is going to go up. So that's why shorts are low. Okay. So when you see shorts get really low, that's when you need to think against the herd and think, okay, if everybody else is wanting this to go high, maybe I should go short or exit my positions because a big drop is going to come. Okay, and conversely, the opposite is you could look at the long market. If you can do the BTC longs, it's the exact same thing. It's just opposite. So you have to train your mind and your brain to look at this and think opposite. Okay, if this is really low, that means shorts are at an all-time low, or they're very, very low. That means that I need to be short, if that makes sense. Okay. So you need to think opposite, okay? So to make it easier on myself, I drew a red box right here, and this is just kind of a signal box to where, hey, if price gets in this box here, this is a very dangerous area. Be very careful of this area. When you see it, be very careful. So that's why I have the opinion that we will be going back down here very soon. We may rise up just a little bit, but I think it'll be very short-lived. So anyway, this video went on just a little bit longer than I had anticipated. If you guys have any questions or would like to see something different in the videos, Please let me know in the comments down below. I'd like to get everyone's thoughts on these different zones. If you guys agree with them, if you guys don't agree with them, please leave it in the comments below, and I will see you guys in the next video. So until then, stay safe. Happy trading, everyone.